Today, I will provide a brief overview of some of the most common tax deductions for entrepreneurs and business owners generally, and for sole proprietorships and single member LLCs or limited liability companies specifically. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the firm Cummings and Cummings Law. I also teach business law at Florida Gulf Coast University, and I hold 4 degrees, including 2 law degrees, together with a variety of tax, financial, and accounting credentials, which I apply for the benefit of my clients in my practice of law. Our firm website is www.cummings.law. Tax deductions are a critical aspect of financial planning for entrepreneurs and business owners. They provide a legitimate and lawful way to reduce taxable income, thereby potentially decreasing the overall tax burden on a business and its owners. However, understanding and applying which deductions apply, when they apply, and how to claim them can be complex. This complexity underscores the importance of working closely with an experienced tax attorney and CPA to guide entrepreneurs through the many intricacies and facets of effective tax planning. Entrepreneurs often fall prey to common misconceptions about tax deductions, believing erroneously that all business related expenses are deductible automatically, or that deductions are straightforward to claim and defend. In reality, the federal income tax code is nuanced, and proper documentation and compliance are paramount to successfully claiming and defending deductions. This brief presentation aims to shed light on some of the most crucial tax deductions available to entrepreneurs and business owners. One of the most significant deductions available to small business owners is the home office deduction. This deduction allows entrepreneurs who operate a business from their home to deduct a portion of their home expenses, such as mortgage interest, insurance, utilities, repairs, and even depreciation. The key requirement is that the space must be used exclusively, regularly, and consistently for business purposes. Many entrepreneurs misconstrue this requirement, thinking that any room or any space used occasionally for business will qualify. However, the IRS is stringent about the so-called exclusive use requirement. Therefore, a spare bedroom used occasionally as an office will not qualify unless it is solely and consistently dedicated to business activities. Consulting with a tax attorney and CPA can help ensure compliance with these and other regulations and to maximize your deduction. Travel expenses related to business activities are another area ripe for deduction and confusion. This includes transportation, such as rental cars and airfare, lodging, and even certain meals while away on business. The IRS allows deductions for travel that are ordinary and necessary for your business, and that ordinary and necessary terminology is a term of art. Intricate rules govern what can qualify as a deductible travel expense. Common misconceptions include erroneously believing that any travel can be deducted if business is conducted at some point along the way. In reality, the primary purpose of the trip must be business related. Additionally, meticulous records and documentation are necessary to justify these deductions. Hiring an attorney and CPA can help navigate these complexities, ensuring that your travel deductions are both legitimate and optimized. The depreciation of business assets is another significant and valuable deduction that entrepreneurs often overlook or misunderstand. Depreciation, also known as cost recovery, allows business owners to deduct the cost of tangible and even certain intangible assets over their useful lives. This includes, among other things, business equipment, vehicles, and even certain building improvements. Understanding the depreciation schedules and depreciation methods can be quite complicated. There are various methods, including straight line and accelerated depreciation, each with its own set of rules and requirements. Choosing the correct method can have substantial long term impact on your tax liability. Consulting with a knowledgeable attorney and CPA that you select and trust can be advantageous in determining the most appropriate depreciation option for your business. Fees paid to professionals such as attorneys, accountants, and consultants are generally deductible if they are directly related to your business. These expenses fall under the category of ordinary and necessary expenses as recognized by the Federal Internal Revenue Service. However, not all professional fees will qualify. For example, fees related to personal legal matters, even if they indirectly or tangentially affect your business, are not deductible. The complexity of distinguishing and segregating between personal and business related expenses necessitates the guidance of an experienced attorney and CPA. Their expertise ensures that you claim all eligible deductions while maintaining compliance with applicable state and federal tax law. Entrepreneurs who pay for their own health insurance can deduct premiums as an adjustment to income, provided that they meet certain strict criteria. This deduction is particularly beneficial for self employed individuals who are not otherwise eligible for employer sponsored health insurance. Eligibility for this deduction is contingent upon not being eligible for any other healthcare plan, such as one offered by one's spouse or spouse's employer, I should say. The deduction is limited to the net profit of the business, and any excess premiums cannot be carried forward to a future tax year. Given these nuances, an attorney and CPA can provide valuable guidance to ensure you maximize this important deduction without running afoul of the many rules. Retirement contributions or contributions to a retirement plan can provide significant tax benefits. Entrepreneurs have many options, including SEP IRAs, simple IRAs, and solo 401ks, each with different contribution limits and requirements. These plans not only reduce current taxable income, but can also help in long-term retirement planning. However, navigating the rules surrounding these plans can be challenging. Contribution limits, eligibility, and timing all play important roles in determining the tax benefits, if any. An attorney and CPA can provide strategic advice to help you choose the right retirement plan and ensure compliance with applicable Treasury regulations. Educational expenses that improve or maintain your business skills may be deductible. This can include seminars, courses, and even certain certifications. The IRS, however, stipulates that these expenses must enhance skills required in your current trade or business in order to be eligible for deduction. Misconceptions often arise around what qualifies as a deductible educational expense. For example, expenses incurred for education that qualifies you for a new trade or a new business are not deductible. To avoid potential pitfalls, entrepreneurs should seek the counsel of an attorney and CPA so as to accurately determine deductible educational expenses. Office supplies and equipment, such as stationery, as well as computers and printers, are typically deductible as ordinary and necessary business expenses. However, the distinction between supplies and equipment can affect how these items are deducted and when they are deducted. Generally, supplies are deductible in the year that they are purchased, while equipment will often need to be depreciated over a period of time, although there are important and timely exceptions to that general rule. The complexity of these rules requires careful record keeping and strategic planning, areas where the expertise of an attorney and a CPA are indispensable. In conclusion, understanding and claiming tax deductions is far from straightforward. Each deduction carries with it its own set of rules and intricacies that require careful navigation. Many entrepreneurs and business owners underestimate the complexity involved, leading to missed opportunities or fines and penalties. The guidance of a seasoned attorney and tax CPA is essential to fully leverage available deductions while ensuring strict and consistent adherence to federal and state tax law. Their expertise can ultimately lead to significant tax savings and contribute to the financial health of your business, and that is what matters. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.